This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabel, and I'm going to give you a stock market update as of Thursday's close for Friday morning. There's a lot to talk about. We've got a lot of different cross currents taking place right now and an increase in volatility. So let's go ahead and get into this because there's a lot I want to cover today. So let's go ahead and take a quick look at the market conditions. So first of all, the sentiment dropped this week. We had a number of bulls decline and the number of bears go up. So the difference between the two went from 21% down to 13 in 1 week. Now, I mean, that's a pretty good drop. What's missing here is that we had this move to the downside. You can see this move to the downside, but we didn't even get to oversold on the RSI 5 on the weekly. And as you know, what I'm looking for is a move where this gets oversold and this gets down closer to zero is what would be ideal. We'd get more bulls than more bears than bulls, or at least an even number. And at that point, I would feel like we really got to be on the lookout for some kind of a reversal. Well, we don't have that in place right now. So we're back to neutral on the overbought, oversold, and we're really sitting at neutral when it comes to sentiment. So let's just evaluate the volatility because this is the big shift for the week where we broke the downtrend line. We clearly got this strong move, an increase in bar size. Okay, that's what the average true range is. Increase in bar size, including gap. So if you include the gap in there. So we've got big bar, and this is a big bar. All these bars are pretty significant when you compare, you know, the size of these bars or even these bars going back. You can see how these are pretty tiny, and that's why this line was dropping. Now all of a sudden we're getting this pop. So typically a pop in volatility means there's more risk. We've got more risk. Now we can look at the trend line break and the rally back up and then a re-break here, and you've got your 1, 2, 3 to the downside, and that coincides with the break of the 18-week. All right. Now we want to do the same thing this way. We want to draw our trend line in, and you notice the trend line is about the same slope as the 18 on the daily. So we know that's pretty important. Now, when it comes to the volatility, I raise this as a risk factor, meaning if I'm calculating out and saying how I feel about the market conditions, well, I mean, this is clearly a negative. It's going to factor as a negative for me. But it's not necessarily a signal, a timeliness signal. I'm going to use my price and trend and momentum indicators to help me enter a signal or give a flash, a sell signal. So I'm going to do that, and when we get into those, I'm going to show you that. So we haven't covered anything. We know we have negative trend on the daily chart. We could really call the daily momentum negative. I'm keeping it neutral. I'll go through that in a minute. But first, before we do that, I want to show you something. So, you know, one of the things I continue to like to go back to is my chart of my 18. So these are all the 18s, 18 day, 18 week, 18 month, 3 month or quarterly 18, and then a yearly 18. So that's what all these lines are overlaid. And I think they do a really nice job of giving us a feel for each time frame. But the reason why I don't think this has been an easy call to say, hey, we're failing at this 18-month. This thing must be getting ready to make a big drop. And any of my subscribers would know that I just have not been willing to make that kind of big call. I've been worried about a failure at the 18-month, but I really haven't had the ability to say, oh, this is going to get creamed. And part of it is due to the fact that the underlying universe is in a much better position than this index. That's one thing. And the second thing is that we already tested the quarterly line. Okay, we tested it back here and got a big reversal here. We tested it here. It came pretty close and got a pretty good bounce off that. So we're kind of caught between these two lines. I mean, if this red line were like this, right, and we were getting this, then I'd be like, oh my God, we're in serious danger just looking at this index. But I don't think we can say that. And so the one thing I was looking for when we had this knife down was a rally back up to a declining 18 and a 18 day and an 18 week, right? But look at the size. Look at the size of this bar today. And the other thing that just stands out when you look at this, look at the buying volume. You see the green bars? Look at the green bars. Have we seen green bars like this in the last few years? We have not seen that. We have to factor in every new day. We've had 4 straight bars of abnormal volume on the buy side. So, I have to respect that. That doesn't mean that I'm turning bullish. It just means we have to respect that as an indication that there are some people that are definitely still trying to defend this 3,800 level. Okay, let's go into the trend and momentum. But one of the things I wanted to do is show you this chart in the upper left. Now, I'm going to switch this to the hourly like I always do, but I want us to look at this for a second and look at what's taken place and recognize if we take all of the moving averages off and we don't look at momentum, we just look at the price chart, what is really taking place here? We had a big up move to the upside, right? And then we turned down, we turned bearish, and then we got a pretty sizable rally, and then we got a pretty sizable decline, and then we've gotten another rally back up. I mean, we have pretty strong support down here around 3,600. Okay, and I can see that this acted as resistance, and then we actually had, it's a little bit high here, but we acted as support, tried to get through and reversed. If you notice, based on the close, I mean, this is pretty close to where this line is drawn. And then we pushed up here, and then look, we had acted as resistance, acted as support, and then overran a little bit. But in reality, again, we had a tail here, acted kind of as, and then we acted as resistance here. Now, it didn't quite make it all the way up to this point, but we've got these kind of 2 areas that I think are pretty key now. Now, why? So where are we right now? Well, we've made a move to the downside and we have a trend line break. We've broken the trend line and now we've moved down to the 50% retracement from here to here. And looks like we're trying to hold the 50% retracement. Now, the reason why this becomes so important, and I think this line becomes so important, is if this turns up and takes out this high, we're basically taking out this kind of key level here. And it really is an area. It is more of an area than a specific level. But if we take out and we do a 1, 2, 3 to the upside, we're basically getting through this key resistance area. And I think we have to respect that. And then if you look at what the chart would look like, it would kind of look like a, you could almost look like an inverted head and shoulders pattern, right? And you could view that somewhat positively. Now, I'm not trying to get you to think that way. I'm just saying we have to stay open. We have to look at all the probabilities. I don't like what happened to the volatility, the fact that that's increasing. So that raises a risk factor. But this reversal at the 50% mark from here to here means that we now have to see if this can push up. And I mean, there's some pretty serious problems up here. I think this is a tall order to expect. But if we can get back up through 4,200, your feelings about being overly bearish, I think you're going to have to temper them. You're just going to have to do that. Now, I know I'm talking about going from 3,900 to 4,200. That's a lot of room before we get any kind of confirmation. But we've had all of this, and this is people getting chewed up and losing money. I mean, for the most part, there's not a lot of money being made in this range here. So I feel like if we're smart about this and we wait for confirmation here, then before going hog wild and getting long, then I think you're going to be in a stronger position, because the reality is that there's going to be so many stocks to buy, so many attractive patterns. If this does turn up, there's going to be a lot of money that can be made after this actually turns. So don't feel like you're missing out on anything right now. This is a period where you don't need to be a hero. I still think there's downside risk potential. And it's also possible that we could be holding here and we could be turning back to the upside. Now, we just made it through a really ugly period for the market based on the news of the banks and the price action last week and all this volatility increasing. And now we have the Fed coming out next week and making a decision. So is this really the time to come out there and with guns blazing and making a big investment in either direction, whether getting short or getting long? I think the answer for me is no. I just know that if we sit back and wait, we're going to get a much better opportunity come to us. All right. So let me just switch this to an hourly, and I'm going to put the indicators back up. So we know we're caught between the 18 and the 40-month line. Okay. No change there. We are bouncing off the 40 a little bit. Now, we also know that the MACD lines both of these lines have been kind of straddling the 0 line, and we don't have any real upside momentum, right? So this break of this trend line was pretty nasty. I mean, I think this is a pretty negative situation that's taken place. Now, on the daily chart, we had red DI break out here, get above the green, and we're now in the process of trying to form a pivot high. We haven't been able to do it yet. We need to make a lower high. We need to do it on a closing basis and form a pivot high. If we do that, then we have red forming a pivot low, and it needs to do it above green and above the 25, in my opinion. That's really what I would be looking for. Now, one of the things I would tell you is that you can see the trend line break on the hourly. We've broken the trend line. This is not all that impressive, frankly, on the green. But we're going to need this to come back down and turn back up. All right. And if it does that, then we're going to be breaking the 18-day. You see how that's what happened when we turn this to a 1, 2, 3 to the downside, we broke the 18-week. So if we are going to turn this around and do a 1, 2, 3 coming back up, we're going to break the 18-day. And that would improve odds that this could carry higher. Just based on the way this is set up and the way this is situated, I would view this more as staying in a range rather than the start of some big move. Until we can get back up through this high up here, we really have to stay neutral right now. If you had more of a leaning toward negative, what you're looking for is failure here. Now, this might overrun a little bit, but if we get a pivot reversal and red DI holds 25, even if these kind of come and kiss, even if this holds 25 and pivot reversals here as this is turning down, then I think you can start to feel really negative, especially if we fail at the 18-week. So there's a lot of things going on right now. We'd have to watch the strength of the hourly. Right now, the hourly is kind of telling the tale. I know that we don't have, so first thing I was looking at today is we had this move to the upside and a pullback, and then this made a higher high, but this was on this bar here. And I was sort of thinking, okay, let's see if this can actually get through this prior high and confirm MACD. Because if not, we would have had a reverse divergence. Okay, but we didn't. This made a higher high with price as MACD did that. And now we have confirmation of the up move. Green DI just made a higher high. So let's just look at this. See Green DI? Green DI was consolidating. It made a higher high above this prior peak and above the 25 level. So we have that in place. It doesn't look all that great right now, but that's why we need to see a little bit more confirmation on the hourly at this point to get through the daily chart and to be convincing move through the daily chart. Because any little follow through tomorrow on Friday morning without a 2 or a 3 should be questioned here. All right. Now, if it's really powerful, it's going to break this downtrend line. Then we start the process of seeing if we can do a 1, 2, 3. The one reason why we have to respect this is look at the volume on the daily chart. I mean, this is pretty impressive volume. I think it even shows up more so if I pull up the spider. You can see the big spike volume day on the down move and then 4 abnormal volume days to the upside where you closed above the open. So these are the kind of things that I think we want to be on the lookout for. Let me go back to the S&P. So we've got, I think based on the fact that we only have volatility increasing on the daily chart, we probably should be thinking more along the lines of this next support area. Go back to the weekly, down here around 3,600. And if in the process of doing that, we increase the volatility on the weekly and it starts to look a little bit more dangerous, then this can turn into something a lot worse. Right now, I'm leaning towards this staying inside this range, actually. I don't know that we're going to break out to the upside or to the downside, but we have to respect the near-term volume, and that could help in the short term. All right, that's the update for the week. Go ahead and let me know if you have any questions or comments. Thanks.